Hi friends, iKargos is back with Fortnightly International Logistics news analysis for the first half of July 2025, which marked by a continued tug-of-war between volatile trade policies and underlying market fundamentals. While some market segments saw demand soften, others were buoyed by specific industry needs and strategic shifts. Here's a breakdown of the key international logistics news. Trade policy rollercoaster continues to drive market uncertainty. The period was heavily influenced by ongoing trade policy shifts and the implementation of new tariffs, particularly by the US against countries like Canada, Brazil, Japan, South Korea, South Africa, and Thailand. This led to significant apprehension among shipping companies and businesses engaged in international freight services. Despite a temporary 90-day tariff reprieve between the US and China ending in August 2025, a broad range of tariffs, 10%, 70%, had already come into effect, prompting US importers to fast-track shipments in early July to avoid higher costs. These tariffs were directly impacting shipping from China and influencing China to India shipping cost for certain commodities. The unpredictability of these policies made freight management and supply chain solutions planning exceptionally challenging. Mixed signals in ocean and air freight markets. The global freight market showed nuanced trends. Sea freight, Drewry's World Container Index, WCI, saw a decline in rates for 40-feet containers, marking a third consecutive weekly drop in early July, largely due to softened demand following the temporary suspension of higher US tariffs. Rates from Shanghai to Los Angeles and New York experienced significant falls. Despite this, global schedule reliability for container shipping continued to improve, reaching high levels not seen since late 2023, with alliances like Gemini Cooperation showing strong performance. However, ocean freight services still face disruptions due to the Red Sea rerouting and ongoing congestion at North European ports, Rotterdam, Hamburg, Antwerp, and transshipment hubs in Asia, Zanzibar, though the reason was bulk cargo prioritization, impacting container vessels. Carriers were trying to manage capacity, but a 1% reduction in global container traffic was noted in the first week of July due to administrative restrictions and lower demand on trans-Pacific routes. Air freight, global air cargo demand continued its upward trend, rising by 2.2% year-on-year in May, marking the sixth consecutive month of annual growth, primarily led by the Asia-Pacific region. This growth was driven by strong demand for high-value goods, particularly from the pharmaceutical industry and e-commerce. However, global air freight rates themselves saw a slight decline in June, the first year-on-year drop since April 2024, amid continued tariff uncertainty. Middle East airspace disruptions and flight cancellations added to transit times and air freight cost. Port congestion and operational bottlenecks persist. Despite some improvements in shipping logistics and schedule reliability, port congestion remained a notable concern in several key regions during early July. North Europe, ports like Rotterdam, Hamburg and Antwerp experienced significant berthing delays, 48-72+ hours, due to increased summer demand, operational constraints and some staff strikes. Shippers were advised to consider alternative ports like Felixstowe or Gdansk. Antwerp-Bruges handled a 4.3% overall decline in throughput in H1 2025, but container traffic grew by 3.6%. However, persistent congestion due to irregular vessel arrivals, Red Sea reroutes, alliance reshuffling and poor schedule reliability strained terminal capacity. South Africa, ports like Durban and Cape Town continued to face operational challenges including strong winds and truck turnaround times. Australia and New Zealand, ports like Fremantle, Sydney and Auckland experienced disruptions due to adverse winter weather, leading to port closures and operational halts. Other regions, delays were reported in Tanga Med, Morocco, and significant waiting times for container vessels in Zanzibar due to bulk cargo prioritization. Rail disruptions in Germany also impacted intermodal transportation. Technology and sustainability remain key themes. Investments in digitalization of logistics continued to grow with a 15% increase in Q1 2025, reflecting the industry's need to optimize and reduce costs. Technologies like AI and ML are crucial for route optimization, demand forecasting and warehouse automation, promising cost reductions of 15% and improved service levels. The demand for clean fuels and decarbonization technology in logistics transportation is also increasing, particularly with the full implementation of Fuel EU maritime regulations. Strategic responses to volatility. Logistics consulting highlighted the importance for shippers to engage in reasonable budget planning, analyze freight rates in line with tariff dynamics, and consider multimodal shipping to mitigate risks. Increased cost transparency and the exploration of diverse freight solutions were key recommendations. Carriers were also responding to geopolitical risks by adjusting capacity and exploring new alliances, like Gemini cooperation, which showed improved schedule reliability. That's all for this update. Thank you for watching this news analysis and hope to see you again with our next video. If you find our news analysis useful, please like, share, and subscribe. Don't forget to press the bell icon for any information, immediate help, and prompt action for various segments of international logistics such as freight forwarding, customs clearance, warehousing, certifications, imports and exports, inland transportation and supply chain, related one-stop solutions and daily logistics news. Visit www.ikargos.com.